Things could get a little grim this week, but don't lose heart. the the optimist in me is absolutely going to be right this time, and you're going to see that the numbers are going to go crazy by the end of this year and into next year. But if you read this headline, check this headline out. On the fence about that Tesla Model Y, public charging may change your mind. Now, would you expect that to be a pro Tesla article? Well, yeah, this article slams other charging systems and praises Tesla charger, talks about their own model, their own experience, with Teslas and other vehicles. And it's a perfectly wonderful article about Tesla. But why would they make this headline be something that's not in tune with what they're going to say in the article? Oh, yeah, it's Forbes. Oh, yeah, there you go. Okay. Well, anyway, as noted earlier today, forget about the Q3 numbers, forget about the margins, forget about what the stock does over the next couple of weeks as we go into this really, really rough, probably bear market, because none of it's going to matter. As Elon says, it is all about FSD and robotaxi. If you didn't see my video from this morning, you need to see that video, and I will be putting a card up later about that. We will see a huge, massive increase in Tesla vehicle sales, to the extent that Tesla vehicle sales will even matter, but there will be sold out and there'll be waiting lines for people that want to get a hold of any Tesla vehicle they can in order to, as soon as FSD is unsupervised. I'm not going to go into my entire argument here again. You can check it out, but those increases will come from smart individuals who want to get into the robotaxi business. And there's going to be lots of those, especially as we see the economy cooling and folks laid off. There are many who would love nothing better than to replace their salary with a super easy small business. I've seen this movie before, folks pouring into small businesses during a downturn. Remember, that's what I've been doing for my entire career, has been watching locksmiths and bicycle shops and hardware stores and people in small business writing about those people. And I can tell you, this is what happens in a downturn: is people lose their job at Boeing, they lose their job at wherever, and they go into small business for themselves. Happens over and over and over again. Well, what could there be any easier business than this robotaxi business? They don't have to do any marketing, don't have to do any selling, don't have to hardly do any bookkeeping, no employees and no overhead. My kind of business. All right. So what is going to be coming even before that? This is just what's coming in August. According to Holmar's blog, extremely exciting month for FSD ahead. Number one, hands-free FSD 12.5 rolling out. 12.5 for hardware 3. 12.5, I'm sorry, for hardware 3, probably this week. 12.5 for Cybertruck later this month. Highway stack going end to end. ASS, banish and reverse. All those things happening in the month of August, to which Elon responded, yep. So there you go. All that is coming this month. Okay, now there's this from Barry Schiff. He says, listen, Tesla just finished their walkthrough of the newly stood up AI compute cluster with 100,000 H100s and H200s, massive storage for video training of FSD and Optimus at Giga Texas. This is not a simple plug and play exercise, and the scale is enormous. The implications: Tesla's AI training capability for FSD, Robotaxi, and Optimus, enormous. Means better and more AI with shorter cycle times between releases and larger step size improvements on average. I don't know. I think there's a lot to be excited about. Anyway, this is Randy Kirk. You want to hit that like button, subscribe, and notify, all that stuff. And if your future finances are secure and you don't have anything to worry about, consider going down there to that Patreon thing and adding $3 a month or $5 a month or $10 a month. Maybe you're currently at 3, you'd like to increase it to 5. Maybe like some, you'd just like to pop in an extra $5 right now, just as a thank you. All right. This is from the 𝐶𝐞𝐬𝐥𝐚. Wait a minute. First of all, Bitcoin now, we'll be talking about this more in a minute, but Bitcoin is well under 60,000. And we've got Buffett raising cash like crazy, selling off almost 50% of his Apple stock. He has more cash in the bank than ever. Why? Why is he so cash rich? Two likely possibilities. One, he just doesn't have anything he wants to buy right now. Nothing out there looks good. Two, he wants to wait and be poised to grab some stuff in the downturn the bear market that's coming. All right, this is from the 𝐂𝐫𝐬𝐧𝐝𝐸 letter. He says, this is incredible. On Friday, the total options trading volume hit 73 million contracts, the highest level in history. Can I say that once again? The total options trading volume hit 73 million contracts, the highest level in history. The number of options contracts traded over the last few years has more than doubled. As the market volatility has skyrocketed in recent days, trading activity is surging. The volatility index, the VIX, jumped 43% last week and nearly 100% over the last month. Volatility now stands at the highest level since the March 2023 regional banking crisis. Volatility is officially back. Volatility, which has been sitting between 12 and 16, 17% at the highest, it's been in that range. And most of the time it's been down around 13, 12, 11 even, is all of a sudden in the 23, 24, 27, and even 28 level, which is historically extremely high. All right, and as usual, I went and I know I'm a little late on this, but only going to find this on this channel. I went back and checked out the truck tonnage numbers, and truck tonnage was down for June by a few percent, tenths of a percent. After being up in May, they even changed the amount of the up in May to where it was only up 0.1%. I think it was down 0.2% in June. So yeah, the truck industry continues to be basically in recession. Home sales also were down in July, according to Redfin. We'll wait for the official numbers from the national, giving the totals from national reporting agencies. But Redfin says they were down 5.8% in June again. Now, I think, by the way, that is going to be temporary. You're going to see this pick up again with the mortgage rates coming down. There's a lot of pent-up demand. And as the mortgage rates comes down, there will be people coming into the market. And there's even some inventory right now, some opportunities for people to buy. All right, what is going to be happening this week? First of all, on Monday, we have got the S&P final U.S. services PMI. Last time it was at 55. That's a good number, but the street is not making a guess on that. And then we also have the ISM Services Index. So one of these is the PMI, which is the purchasing managers, and the other one is the ISM Services Index, which is the index of actual activity. So both of those having to do with services. If these miss, then the market is going to be not happy. If these come in, now there's, again, no expectation here. There's no number that is being listed with regard to what the street is expecting on these. But if they're not good, that will be more evidence of a slowing economy. And you'll see that the market is, of course, already down on in the pre-market. We'll be taking a look at that in a minute. But it is, this would be, could be more evidence of a slowdown, as the only part of the market that's really holding things up has been services. All right, then on Tuesday, we get the U.S. trade deficit. Last month, it was $75.1 billion. Again, no projection here. I don't know what's going on. They're not projecting anything. Same thing on Wednesday. Consumer credit comes in. Last month, $11.3 billion. No projection. I don't know what's going on here. Even initial jobless claims. Yeah, no projection. Last week was, as you remember, was down a lot. I mean, there's up a lot, and no projection here on that one either. Nothing. Everything is without projection. I don't know what's going on. Wholesale inventories, they're showing no projection as well. Last month, it was up 0.6%. I would expect wholesale inventories to be up again. If business is slowing down that much, I think you're going to see wholesale inventories, because it'll take a couple of months for companies to start reducing. And we've already heard that car inventories are very high right now. All right, so initial jobless claims probably going to be up, or maybe not compared to last week, because it was kind of high. So consumer credit, I'm also going to predict that the consumer credit number will be going up. At some point, consumers will stop putting as much money on credit cards. but we'll have to see what happens then to delinquencies. All right, this is from Market Watch. Market Watch says, on display Thursday and Friday, bad news on the economy is no longer viewed as a positive for stocks. That's the best, most correct statement I've heard all day. For much of the year, weak data helped underscore expectations for Fed rate cuts, helping to fuel the rally. Now, weak data strokes fear of recession and accusations that the Fed has made a policy mistake by waiting too long to begin cutting rates. But I've been telling you all year that the recession we would see lower GDP in the third quarter, and that I've been saying for 6 weeks now, I think, that the recession started in June. Time will tell whether the economy is slumping into recession or merely touching down for a soft landing. It is going into recession, but investors should be prepared for bumpy conditions entering the part of the calendar year typically marked by increased volatility and seasonal weakness. From Reuters, the MSCI Asia ex-Japan stock index slumped 2.5% on Friday. Now, I know I don't usually talk about the Asia index or the European indexes or stuff. Down 2.5 on Friday, biggest fall in over 2 years. Japan's Nikkei tanked 5.8% for its biggest fall since March of 2020. Japan's broader topics is 6.1% slide, worst day since 2016. All right, are you hearing this? Yeah, this is what I've been talking about. I've been seeing this. I don't know. I just know these. Last year, I told you there would be no recession, and you might have believed me. Maybe you didn't, but the street was completely wrong. I was right. This year, I told you there would be a recession in the third quarter. I'm telling you, it's already started. Given Friday's U.S. payrolls fueled selling on Wall Street, a sharp sell-off in Asia, early Monday is likely. Friday's market gyrations may prove to be excessive, but they are worth noting. No, you'll see what's happening with the pre-market. The two-year U.S. Treasury yield plunged 30 basis points, its steepest one-day fall since the U.S. regional banking shock of March last year. Its weekly fall of 50 basis points is in line with those seen in the COVID-19, Lehman, 9/11, and Black Monday crises. In equities, the VIX volatility index at one point on Friday had doubled from the previous day. The stampede to unwind the carry trades helped push the yen up nearly 5% against the dollar last week. The Japanese currency has only had 3 better weeks in the past 25 years. Plunging U.S. bond yields may ease financial conditions. Goldman Sachs Emerging Market Financial Conditions Index on Friday fell to its lowest since March, but they're loosening for bad reasons, namely recession fears. Hopes for the much vaunted U.S. economic soft landing appear to have completely evaporated, replaced by fears of a hard landing. Traders are now attaching a 70% chance of the Fed cutting rates by 0.5 percentage point next month and are pricing in 115 basis of easing by the end of the year. 115 basis points. So 425s and, well, I don't know how they get to 115, and over 200 basis points by next June. Yeah, that sounds about right. That could be right. High yield corporate debt markets will be worth watching closely. This is where the first signs of a credit event usually appear. So we'll be watching that. High yield corporate debt heralding wider retrenchment across businesses, rising unemployment, and ultimately recession. High yield U.S. debt spreads over treasuries jumped on Friday to the widest of the year at 370 basis points. But that was mostly due to the slump in government bond yields rather than investors beginning to dump corporate debt. If this dynamic changes, hold on to your hats. Okay, what are the earnings coming out this week? We've got Airbnb and we've got Uber. Both of those will give us some, and Disney, which all three will give us some indication of the consumer as well as travel, which going into the fall, we'll see, maybe we'll begin to get some color on what these companies are expecting going out of the summer season into the fall season. You've got Eli Lilly coming up. That's always going to be interesting, along with Palantir. And then you've got Caterpillar, and Supermicro. Then you've got Caterpillar, which will give us more indication on construction. Well, okay. So you just heard all of that, and I just read a whole bunch of other theories from a bunch of different economists and folks and what they think is coming next. And I found them uninformed and behind the curve. One analyst had cut his holdings on July 1st. but his reading was still for a soft landing. And I think he's just completely wrong. Let me be clear. I just want to clear this up. I do not expect this recession to get out of control. I think it'll be short, probably 6 months, maybe 9, but probably 6. If Trump gets elected, it will probably end quickly in the first quarter of next year and be fine by the second and third quarter. And by the way, a lot of these analysts say the same thing. If Kamala gets elected, it probably will continue longer, might take a full additional 2 quarters, but it'll eventually clear up and it'll go back up to normal again. It won't really matter that much, except in the very beginning of the two. It depends on what they do also, of course, but not a lot. Basically, once the recession clears out the muck, as long as there's nothing stupid being done, then these companies everybody will get back to business. All right, so where are the markets now? Oh yeah, this is not, again, I'm not worried. I'm not concerned. As you know, I'm all about what Tesla's going to do in the next 3 quarters. It is going to be flipping amazing. All right, let's go ahead and look at bonds first, as we usually do on Sunday nights. And what we've got is down another 1.4 basis points on the 10-year at 3.78. I would, of course, as I've mentioned before, expect that to continue to drop rather rapidly. We've got the 2-year only down 0.7 of a basis point. And that difference now is still at about 8, maybe 9, 9 basis points. So again, we haven't made the complete switch yet. I'm expecting that switch to come this week. I could be wrong, but that's what I'm expecting. Here's the crazy one. The US 2-month is still 150, almost 100, 160 basis points, 155 basis points higher than the 10-year. It's really crazy. Something's going to happen on that. I don't understand the bond market enough to tell you what to do. I'm not giving you investment advice anyway, but I'm just telling you, this is a big deal. By the way, the bond market, the bond yields are dropping as I'm watching here. We are down now to 2.3 basis points. We're down to 3.771, and the 2-year is down by 1.1. Interesting. Just while I'm watching, it was dropping radically. Okay, let's go on to oil. Oil is up just a bit. 38 cents and 42 on Texas and Brent, sitting at 73.91 for Texas Intermediate, Brent at 77.23, dramatically down from where they were just a week ago. Natural gas down another 1.53. This is a huge drop. I think we're now approaching almost 30% from where it was just over a month ago. We've got gold continuing up. It came down and now it's picking back up 980 in the pre-market to 24.79. Not over 2,500, which it was earlier last week. Silver now 28.57, up a bit right now, but still under 30. And copper managing to hold on above $4, but of course it was at 5.10. So that's a 20% drop over the last, I'd say, about 6 weeks. And the commodities are similarly down dramatically. All the commodities are down. Okay, the dollar down against the yen, as we mentioned, continues to drop against the yen, another 0.75%. We've got the dollar up against the euro, and we have got, as I mentioned, the Bitcoin down even more. We're down now 27.42 for the day at 57,453. We're getting very close to going into breaking through resistance levels that I don't think we've seen for a lot of months. I could look it up, but I don't want to do that on the fly. I'll report on it tomorrow morning, okay? Now the equities pre-market. Are you ready? If you haven't looked already, here we go. The Dow down 255 or 0.64%, S&P down 53 or 0.99%, and then the NASDAQ down 295 or 1.59%. Again, let me just be clear. I believe that the NASDAQ will go down 30%. I believe that the S&P and the Dow will go down 20%. We will go into an official bear market. I believe we will bounce off of those numbers. Now, that's not going to be a straight line. We'll be up and down. There'll be the dead cat bounce and all that jazz that you normally expect. So it's not going to be straight down, but it will eventually, over the next few weeks, we will get that full bear market. and then it will begin to pop back up again. And by the end of the year, depending again a little bit on the election, well, a lot on the election actually, based on history, if Trump wins, we're almost certainly going to be up, I would say 5% above our all-time highs by the end of the year. Recent all-time, not, yeah, in other words, yeah, you know what I meant. And if the Democrats do pull it off somehow, there's a good chance that it will be down at the end of the year. And that's just history. I'm not talking politics here. That's just historically the way things work. I think with regard to Tesla, I think Tesla is possibly going to be slammed by this bear market that we're going to go into. We could be going back under 200 again, testing a couple of those like 168, et cetera. Some of those earlier, ridiculous lows, but maybe not. It's really going to depend on just how much the retail and maybe even some of the institutions decide that these prices are just way too low. Even in a bear, they may decide to start scooping them up. Remember, Tesla is uniquely going to benefit from the slide in interest rates, both on car sales as well as the discount rate with regard to analyzing the value of Tesla. So we'll see. It could, I wouldn't be at all shocked to see it go under 200 and go into some of those high 160, maybe 168. I forget what the exact number was, but it could easily have a lot of trouble penetrating 200. And we might see Tesla going against the market as it has much of the last 3 months. All right. And then remember, I promised you I would put the card up for the 2 videos from earlier today. Number 1, an absolute must-see. That is from this morning, where I talked about what people aren't seeing. I didn't see it until yesterday. I haven't seen anybody else talk about it. Massive, massive, massive increase in car sales that will happen as soon as the announcement is made that FSD is now unsupervised. It is going to be, you won't be able to, you'll be standing in line forever trying to get any kind of Tesla vehicle. And Tesla will have to do something about that with regard to pricing. Card for that. And then Elon mentioned earlier today that he believes that a civil war in England is inevitable. Not exactly sure exactly what that turns out to look like, but I did do a report on that in, again, not extremely political. Well, I guess it is. Yeah, it was very political. If you want to see that one, I'll put that card up too. All right. It's been great talking to you.